Now, my dear friend, the next change, which the provision says, the amendment says, is the insertion of a section 11A. Now, my dear friend, when you are witnessing that at times there is a dispute that whether this activity will be subject to GST or not, then there are the practices which are being followed by the various type of assessees, assuming that this activity is not taxable. I'm giving an example that let us assume that the electricity on a common places will be taxable or not. And if the resident welfare associations are not charging the tax from the resident on the common area maintenance or the common area electricity being provided, then it is a practice. I'm not saying that it become exempted. I'm saying that it is a common practice which is being followed across the country. Now, the government has empowered themselves that in case they feel that this is a common practice being followed by the everybody, and to give the benefit to the SSC at large or unnecessary, creating a situation that there will be a large number of notice will be issued, the government may decide to exempt a particular activity from the levy of tax. So in that case, they need a power. So section 11A has been introduced under this GST Act to say that if a practice is there which is not which is generally prevalent regarding the levy of central tax or any supply or goods or service or both, which they feel that okay, it will reduce the kind of a litigation. In that case, they can issue a notification to exempt or to say that this activity will not be attracting the GST up to that particular period. So, my dear friend, I just wish to share with you that this is something that which is there being introduced through this CGST Act, section 11A. Now, my dear friend, coming to the next change, which is coming as far as this section 13, that you have to pay the tax under the reverse charge mechanism. Now, my dear friend, I am talking about the time of supply. So, when you are liability to pay the tax. Now, my dear friend, when we are discussing about the section 13, which deals with the reverse charge mechanism, meaning thereby that if you have receiving the invoice from a service provider and you have to pay the tax under the reverse charge mechanism. So when you have to pay the tax. Now, my dear friend, the normal provision which says, which was there, that you have to pay within 60 days from the date of invoice. So I am used to give an example that, say, for example, the invoice was pertaining to the 1st of April. I received the invoice on the 15th of May. I booked the invoice on the, say, for example, the 2nd of June, and I paid to the supplier maybe in December 2023. Now, in that case, the invoice which was pertaining to 1st of April, I paid in December, when my liability to pay the tax will arise. So, normally, my friends used to say that when I book the bill or when I pay to the supplier, the answer is that I have to pay the invoice, I have to pay the tax under the reverse charge mechanism within 60 days from the date of invoice or payment whichever is earlier. Meaning thereby from the 1st of April, 60 days will start because based on the invoice. Now, my dear friend, there are the cases when somebody is an unregistered person. He will not raise the invoice at all. And it is the self-invoice which has to be generated by the buyer, the recipient of the services. Now, my dear friend, in those cases where the supplier is an unregistered person and the buyer has to raise a self-generated invoice on himself, in that case, this 60 days provision will not be applicable and this period will start when this invoice will be issued. So, it will not be a case that when the services are provided within 60 days. So, my dear friend, I give you an example that, for example, an advocate is there, which is an unregistered person. He raised the invoice to you, he provided the service to you in 2020. Now, you forget to pay the tax under the reverse charge mechanism because you are not aware that I have to pay under the reverse charge mechanism. In 2024, you came to know that you are supposed to pay under the reverse charge mechanism. And you are raising the invoice to yourself now for the services being received on 2020. So, my dear friend, in that case, the point of taxation as per the time of supply, section 13 is saying, now amended, is saying that the time of supply will arise on the day when you are raising the self-invoice to yourself. Meaning thereby, now in 2024, your liability will accrue and accordingly there will be a benefit that the provision of section 16(4) will not be applicable on you based on the 2020. It will be based on the 2024, meaning thereby now you will pay the tax and claim can avail the credit for whatever the tax you are paying under the reverse charge mechanism. So my dear friend, the point which I explained you when this 53rd GST Council meeting was announced, that there will be amendment which will come to enable you the credit, because there was a litigation going on. The department was saying that you have to pay the tax along with the interest, and now the credit will not be available because you are paying the tax in 2024 for the services which was received in 2020. So your eligibility to claim the credit was only up to the September 2020. So that was the issue which was there, which was blocking your credit. But now with this amendment under section 13 will ease that particular aspect for the benefit of the assessee at large of this Finance Bill 2024. My dear friend, then there is a 8th amendment, which is a consequential amendment, which we discussed at the time of supply section 13. Meaning thereby, as I mentioned you, that when you have to generate a self-invoice, so you received the services in 2020, you raise the invoice in 2024 or to yourself on a self-invoice. But my dear friend, as section 31 deals with the self-invoicing, the law says that I will prescribe the procedure and the time frame also when you should raise the invoice in case of a self-invoice mechanism when you are buying from an unregistered person.